Good afternoon, friends. Today, I'm excited to welcome on our show Mr. Abhijit Gulanikar. He's the President, Business Strategy, SBI Life Insurance. Abhijit, let me say a few words, joined SBI Life as their Chief Investment Officer in 2009 and has been since then in charge of business strategy. Abhijit has handled various functions in the insurance industry, both life and non-life, such as investments, finance, planning, and strategy. Abhijit, I'm very excited to welcome you on the show, given your vast experience in life insurance, to help us think about life insurance in this COVID crisis. Welcome to the show.
Thank you. They're happy to be here.
Yeah. So, Abhijit, given that you had such vast experiences in this industry, we thought we'll start with a section which is the must knows. So, if people take away 3 points, right, that they remember from this discussion, these are the three most important must knows about life insurance. So, my first question to you, right, is we typically tell people have 10 times of your income as your term life insurance. Is there a better way, or how do you think about this question?
India is so underinsured market. So to get people's attention 10 times insurance is a very good, simple thumb rule for people to understand. But it is not adequate if you want to do appropriate planning. So let me just add a few points. So what happens is you would expect people to have liabilities, say a home loan or a car loan or whatever. So you need to be covered for that, because if unfortunately something happens to you, then uh, the liability will have to be paid off by somebody, and you don't want that somebody else to take care of liability. So that is a clear addition to the 10 times simple thumb rule. Also, this 10 times thumb rule comes from a rough estimate of how much you will live longer post your retirement. And second is what is the interest rates that you earn. Now, in both these things, the trends are, I don't want to say people are living much longer post retirement, which is good, but that means you need a slightly higher corpus. Point number one. Point number two is interest rates in general, broad trend has been they are going down. So if you had expected India to have high single digit interest rates that you would earn on retail products, that has now become whatever 6-7% or some numbers like that, maybe even lower than that. Then clearly the multiple that you need to keep aside is a higher number. So the way to look at it is that if you want to post retirement, you would want about, let us say, 40 or 50% of the income you hope to earn at the time of retirement to be available to you for all your expenses, having taken care of medical through either insurance or some safety savings, or whichever way you want to look at it. uh, what kind of investments would you think you need for that amount? And that is the critical piece. And a 30 or a 40-year old, your spouse, you would expect to live, unfortunately, if something happens to you, to live 40 more years, right, from that time. So you have to plan from that perspective, that for 40 years, how much income do you think the spouse would need? And the planning needs to be. So my take is, for a younger guy, actually the multiple is higher. So anything between 12 to 15 times plus any liabilities that you may have. So
Got
home
it.
loan would be the biggest liability, I would say.
Got it. Got it. Fair enough. So I think what you did is you nuanced my answer further. So I said 10x. You said 12 to 15x of your income. So if you're making 10 lakhs, you should be doing 1.2 crores to 1.5 crores. But let's call out the key point you made, right? Because I think you said it very explicitly. You said this is excluding your liabilities. And typically everyone's biggest liability, right, is their home loan. So if you've taken a home loan which is 10x of your income, then saying you have life insurance of 10x is not enough. You need to have 10 to 15x excluding your liability. That's a very nice one. Thank you. Now let's come to the second question, all right? Now the advantage of buying life insurance young is you lock in your rate for the rest of your life. So unlike health insurance premium, which can get reset quite regularly, let's say once in 3 years, life insurance is a locked-in premium for the rest of your life. Now, recently, a few companies increased their premium by up to 35%. Abhijit, why did it happen? And is more of this about, could it happen in the future?
So, just to Adil to reconfirm what you are saying, people who bought the policy before price rise will continue to enjoy the low rates. So, for them, if they bought a 30-year, 40-year policy, whatever they bought, they will continue to pay old premiums and not the new premium.
Right.
The premium rate is applicable at the time of buying policy. So, what happened is, I think, because of competition within the Indian market, plus the reinsurance support or whatever, Indian rates had got very competitive in terms of what is the term life premium available within India. Unfortunately, the experience for the primary life insurance company and the was not at par with what the pricing was. So, I mean, very crudely, our pricing was similar to what you see pricing in Singapore, etc. But I do think that our actual experience is slightly worse than that. So that is why you see this price hike. My initial thought process or the current understanding is I do not see any significant price increases after this year, because I think the competition which had taken it slightly lower than what was expected has now come back to, I think, a little more sustainable levels. Obviously, going forward, let us say 5-7 years down the line, as the Indians become richer and mortality rates improve, then again premiums will go down. But that is far off. I mean, a little too early to predict on that. But I don't see any increase coming for next 1 or 2 years from the current level. There are still some companies who have not adjusted their premium rates for the reinsurance rate increase, like SBI Life has not yet adjusted. We are in the process of adjusting it. But all that adjustment will happen in this financial year 2021. After that, I don't see any increases happening.
Sure. Thanks for giving us that guidance. So this year we'll see an adjustment happen in the premium, but then it will hit sustainable rates and continue. Now let's come to the question of add-on or a rider. Now, typically that is a tough choice one needs to make. I've always thought the most important rider is critical illness, because let's say something happens to me, I don't die, but there's a huge loss of income, that the critical illness rider is the most important rider to think about in term life. Have I understood this correctly? What is your view on which is the most important rider to consider?
So, see, there is an accidental death benefit rider, and it comes super cheap.
Hmm.
And the likelihood of a young person dying in accident is actually much higher than any other. And it's
Hmm.
like absolutely no price. I know, very
Hmm.
limited, 200, 500 rupees, or etc.
Hmm. Hmm.
So accidental, I think it's a no-brainer. It just needs
Hmm.
to be added. It won't
Hmm.
change the premiums also. I mean, it's so
Hmm.
marginal that it won't matter.
Hmm.
After that, I think yes, critical illness, because we are seeing, unfortunately, 40 minus people in India getting heart attacks.
Hmm.
Some of them, unfortunately, getting strokes. Strokes is much less than heart attack, but yes.
Hmm. Hmm.
And then the key issue is medical will cover you for Mediclaim policy will cover you for treatment. There is no challenge generally if you are a good
Hmm.
medical policy or your employer is giving.
Hmm.
What it does not cover is two things. One is you may have to take longishly 3 months, 6 months if you are badly off. That you will have some loss of income there clearly. And then what happens is generally you need additional help, because you will need somebody to assist you at home or your family. Then the critical illness rider, because it is based on the diagnosis and not on actual expenses, it gives you a lump sum which gives you flexibility. So let us say you take a critical illness rider for 5 lakh rupees or a 10 lakh rupees, then no questions asked, you get that amount, which gives you some financial stability in adverse times. That I think is the key important point of critical illness. Also, what has happened is in cancer, it's slightly unique. The treatment costs can go from not so expensive, I would say still expensive, but couple of lakhs, which probably will get covered by your medical, to super expensive depending upon unfortunate event of some complicated high cost treatment. And those kind of cancer then mediclaim would not cover. So this will add as a add on, that you have a a chemo which costs you say 5 or 10 lakh rupees, and then it just doesn't dip into your saving. So critical illness rider is slightly expensive, but I think it's an important rider to have. In some of the products, like for example in SBI Life Purna Suraksha, because we have combined critical illness and term, even the critical illness premium has been kept constant for the whole policy, and it does not change even when you get older. That's some of the advantages. So I think it's quite a unique product. If you are taking critical illness insurance, there is a chance that you will get critical illness insurance. So that's the kind of a combined unique product we have. But as I said, the accident rider is a no-brainer and it's very cheap, so it will not affect your premiums very marginally. Critical illness is something which you should consider, or you can consider products like SBI Life, Purna Suraksha, which is a combined critical illness plus term cover.
Right. So a funny story here. I bought my first life insurance policy when I got married. I bought my second term life policy when I had a daughter. And like you said, I took the accidental death benefit because it didn't cost anything. And I took the critical illness because if I was to get a critical illness like heart disease or cancer, and I wasn't able to work for 1 year, that critical illness payout, right, would take care of my expenses, and in certain cases even cover the hospitalization costs, which is not covered in my Mediclaim policy. So everything you said resonates with me. I took my benefit as a single shot payout, Abhijit. Now, when one thinks about a single shot payout on term life or a staggered payout, right, what is the right framework to take this decision?
So either actually, according to me, it's fine. Okay,
Hmm.
but if you think so, typically staggered payouts are available for periods between 5 to 10 years, depending upon what the customer choice is. Honestly,
Hmm.
uh, if you think the spouse is financially savvy enough to invest the lump sum that you are getting, 50 lakhs or 1 crore or whatever amount you have insured, and there is somebody, either he or she is savvy, or there is some good advice available to you to invest that money, I think single shot is not a challenge, because you get lump sum, you don't need that money, you need to keep it invested. Staggered is more useful when there is some uncertainty around how the financial planning will be done. So it is better that you get money, and there is some interest rate building. So it's not that, if you take a 1 crore sum assured, if it's a staggered payout, you get something more than 1 crore, because there is an interest rate you get because you are not taking money in one shot from life insurance company. So there is an amount where you get a fixed amount. It's not interest rate, but that fixed amount has a built-in interest rate component. So you get a little more than 1 crore because you have taken the money staggered and not taken in one shot. So to that extent, my take is either choice is fine. It will actually depend on the circumstances of the family, or the more importantly, what is the financial advice available to the person when the money comes in one go.
Fair enough, fair enough. So let's come to the second section, right? Clarity at the moment of truth. What people sometimes don't realize is what really matters. What really matters, right, is when you make that claim. And I think on this, SBI Life scores very high because you have that trusted brand. Let's talk about this. First, Abhijit, in the news has been Section 45 of the Insurance Act. Help people understand this, please.
So now what has happened is the regulator has made it extremely, or the law has made it extremely clear that come what may, after 2 years, you will not be able to challenge the claim. Okay, so there may be some very stray exception, but I don't think so. What happens is, we do see in life insurance industry there is some anti-selection that happens, and generally that gets revealed in, according to us internally, in 3 years, but the regulator has said 2 years, so be it. So those, after that, the claim cannot be challenged. If it can be challenged, it can be challenged if the claim happens within the first 2 year of the buying of policy. So that Section 44 is actually a consumer protection initiative, which the Indian law has done. Earlier, the law was not so clear on that part, but post the amendment in recent past, about 5 years ago, is 6 years ago now. is when the Section 45 has been made more stringent and in favor of the consumers.
Yeah, thank you for clarifying Section 45. So after 2 years, right, claims cannot be challenged except in very, very, very rare cases. So that's good to know. Now, just so that people are aware, right, this is a double question. I've done many health claims, and I know the importance of making sure you register with the TPA when you get admitted, you're aware of the room rate, things like that. When it comes to a life claim, right, what do you need to be aware of? Key 3 points to make sure that your claim gets processed on time.
So actually, for life claim, the care needs to be taken at time of the buying policy, not so much at the time of unfortunate event. As long as you have declared a how much cover you already have bought, and that you are not going insurance shopping, because we have seen some fraud like that also. And second, you have declared your health. There is no way an insurance company can challenge your claim. So we do think that as long as you are as a consumer truthful about these two things, that whatever ailment, if you have any ailment, that is declared upfront, and that you whatever insurance policies you have or existing insurance policies, they are declared. There is no challenge, no insurance company can whatever challenge you on the claim. As far as the process is concerned, the documentary process at the time of death, the only key document we require actually is the death certificate, which is not a significant requirement. And if nominee can give the Aadhaar card, his or her Aadhaar card, to identify himself, Aadhaar card, or sorry, any other normal documentary valid proof, so passport copy or a PAN card. I think that is the only two things that we require. As to what is the, you confirm the identity of the nominee who is getting the money, and then you give the death certificate of person who unfortunately deceased. There is no other documentation required, no preparation required at all.
Fair enough. Now let's focus on that main moment, right? When you're declaring your health and other issues when you buy the policy. Let's not
Correct.
discuss whether it was done willingly or unwillingly, but what are the mistakes people make because of which their term life policy gets rejected typically?
So we have not, it's not very common, let me be honest, but what
Mm,
we have seen is there are people who have had ailments or who
mm,
are disabled or something, but they
mm,
don't declare that,
mm,
I'm disabled or I have an ailment.
mm,
So that is the, what we generally see is we are more worried about deaths which occur within 1 year of 1.5 years of policy being bought. And these
mm.
are the typical 2 or 3 reasons that are already suffering from something, and still insurance was bought and it was not declared. I think
Okay.
that was the main thing. And once in a while, I've not seen it, is alcoholism,
Okay.
which
Okay.
is
So very
you have to declare smoking and alcoholism, which
okay.
also needs to be declared.
Okay, so be very careful when you declare smoking, be very careful when you declare alcohol consumption, and when you declare pre existing illnesses. So let's
Right.
move to the next section now. And this is about digital strategy. So, Abhijit, broad question first. 4 months in lockdown, it's not very clear how things are going to clear up going forward. What has changed most for consumer and for the life insurer in the last 4 months?
So see, the trends which were happening in the last 3 or 4 years after mobile revolution in India got just accelerated post this lockdown. See, one of the key things that happened is we already had most of our consumers onboarded digitally, correct? But still, there was some bit of physical paper which was required. So you do 99% of the work digitally, but there is some bit which is, I think that has been done away now by most insurers. So there is no physical. You need to scan few documents and all. I'm not denying that, but that's still digital. The consumer can sit at his home, scan the documents or WhatsApp it or whatever way you want to do. So that is one part which has happened. The second important part where both consumers and customers have got very comfortable is earlier, you wanted to make a pitch or something. Consumer said, "कि आप office में आओ, आप घर में आओ, you do, and then you speak to us." And now consumer is comfortable acceptable that the person who is advising him is available on a video chat, and call happens on a video, they are perfectly fine with that. I think that consumer mindset of or even the distributor mindset of reaching out to customer purely digitally has happened in a big way. I also think that digital influence has increased and it will continue to increase. That we will consumer education or consumer advertising both will shift away more from the traditional channels, which was TV and print, into digital channels, and it could be various ways of digital channel. And that trend has uh, already happened for last couple of years, and this lockdown has, according to me, will accelerate that trend dramatically.
Makes sense. Now, you spoke to me that there's a combination of the digital influence and the call center helping consumers, handholding them through sale. Now, do you see this aspect and awareness growing in consumers that it's better to buy digitally with some support if required via a virtual caller than to do it offline? Is that increasing dramatically because of COVID?
So yes, we have in protection, we have seen some acceleration
Hmm.
as far as digital sales are concerned for
Hmm.
the industry as a whole.
Hmm.
As you rightly said, it's not fully digital sale. There is
Hmm.
some bit of assistance which is coming through a call center support or
Hmm.
expert support over distant, over a video or a phone call. Uh, on other products, we have not yet seen our normal traditional savings products or ULIP products. I think still are sold on non-digital way. Uh, Across the world, I think broadly what has happened is the digital influence has increased, and digital hybrid sales model where there is a person involved and there is digital involved is the way that the world is going forward.
Makes sense. Makes sense. Now, you said that today you can scan your bank statements, your income documents, your KYC. And before we got on the show, we were briefly chatting, right? My question was, can that also be made frictionless? Why should I scan and take pictures and upload? It's cost for a manufacturer to collect, process, and it's time for me to find this. Can that also be made frictionless? And you mentioned a trade-off. Tell us a bit more of that because you see this from a long-term strategic point of view.
Yes, so there is now insurance companies also have been allowed KYC,
Hmm.
electronic KYC, which is Aadhaar based.
Hmm.
Um, there is still some friction there, but we do think that if eKYC is fully settled, then there is no identity documentation already required. That is confirmed, so there is no challenge around that. So as far as identity, address proof, etc., are concerned, are totally done. Also, what is happening is increasingly with consumer approval, and that process has not yet fully settled. So just I will tell you, like for example, and that is something which will happen, is there are account aggregators now allowed as per RBI rules, right?
Hmm.
And they can share data. So can the consumer, and that has yet not yet happened, that can the consumer give account aggregator the approval to share data with SBI Life, and then SBI Life takes that data from his bank account and estimates the income rather than depending upon the income proof. Right? That is one way of doing it. Second is the collab. This is not yet happened. Second collaboration, which is already happening in a small way and which will accelerate, is SBI Life going to credit bureaus, sorry, not credit life bureaus, credit bureaus to get some additional information on the customers. So those kind of stuff, on far as income estimations are concerned, will increasingly get more, clear as goes by. What does happen is for salaried guys anyway, it's not such a big challenge, right? So for salaried guys, the financial proofs happen very quickly. It is for the non salaried guys, and India has a large proportion of them, people who work on self-employment basis or have businesses, etc., where there are challenges. And maybe some of these initiatives around credit bureaus or account aggregators, or I don't know, we've not really talked about it, but GSTN records, which are also theoretically supposed to be available, that may help us do financial underwriting. The next key question is medical. So already a large part of proposals are now gone into telemedical, and we are very soon coming with video medicals also, which will give even one notch higher than telemedicals. So for large proportion, I would say 97, 98% of the policy, either there will be no medical or the medical will be over phone. That is gone. For the last couple of percentage cases, I think medical will have to happen physically, because we have not yet really found out any alternate means of assessing long-term health of the customer unless you do a diagnostic test. So you do, obviously you do home medicals, you send people across, which has got little bit affected in this COVID time because people don't want outsiders to come out, but I think that will go away in 6-8 months time. So that also we will try to make it as frictionless, but I do think there is significant scope available, and I'm giving you a very broad picture. There are nuances, consumer pain points, which probably insurers themselves have not fully understood, and they will understand when, because the low hanging fruits are getting plucked right now, and as we improve, there will be more optimization possibilities that will happen in the life insurance case.
Right, right. Makes a lot of sense. So, one of the things we've seen at BankBazaar, and we have about 50 million registered consumers, right, who are savvy and prefer to do things digital, is this thing about eKYC via OTP. Banks are doing it, and
Correct.
technically, insurance companies are supposed to be given access to do it, but no one has been given it. So, this is something all of us as an industry are pushing for, saying non-banks should be given the eKYC via OTP access. You spoke about account aggregator, Abhijit. It's been in the news a lot, and I think Sahamati has been doing some good writing and shows about it. But in one click, can we share bank account details with regulated entities? I think that will be a game changer. And lastly, you spoke about video medicals. So exciting to hear that. I think video KYC is really taken off in banking. We can't send anyone to your house for a loan or a credit card, but in 6 minutes, right, you can finish video KYC, and we can send you the loan and we can send you the card. The bank can do with an officer sitting live on the other side in 5-6 minutes, right? The video KYC can be done. So very, very interesting that you touched upon those technology innovation, which I think has been accelerated in the lockdown period. Now, Abhijit, we'll go to the last part. Now, you are a business leader in addition to being an insurance leader. People are obviously going through tough times. What advice would you like to leave viewers with in terms of how to overcome the current challenges we're going through?
So it's tricky. So everybody has, I'll go to a couple of things. So first is on the investment side. I think people uh, do look at, too much on asset class. I mean, office class is important. What you put in equities, what you put in bonds, what you put in FDs, what you put in small savings. But a useful way of looking at investment portfolio for an individual is actually looking at what risk you want to cover. So just to give you an example of that. So you have a daughter and you think in India the gold giving and is not going to go away. Okay, I mean I don't see that going away in foreseeable future. Then are you covered for the fact that you need to go X amount of gold for your daughter, or you think your daughter or son wants to go abroad to study, you want to send them abroad? Are you covering the risk that you can't cover fully, but saying that the Indian rupee might go, it may not go also, but from 75 rupees to a dollar to 100 rupees a dollar. So there are various kinds of risk, and it is useful that you don't look at from asset class perspective or from a risk perspective. It does give you some insight. It may not change your asset allocation dramatically, but in certain circumstances it does change dramatically. I mean, I have seen that progress. So that is one thing, and the risk has got highlighted in this COVID. I don't think anybody, neither I had not visualized that the whole world will shut down. All BCP scenarios we had was this office close this down, or this there is a flood, earthquake, fire, and that all offices of a particular company pan India would be closed down for a month, and actually across the world for multinational companies. It's something which we had not. So it is useful to think in terms of risk from when you are doing your investment planning. Second is you don't need to reach your goal in one go. That hurry, I think, is a sometimes becomes a big of challenge. So let me take example of life insurance, for example. So in terms of life insurance, we discussed this 10 to 12 to 15 times plus home liability. But it may not be possible given your financial circumstances for you to reach that cover in one go. It is okay for you to reach that goal in 5 years, 7 years time, as long as you have a roadmap and saying that no, this year I have covered 40% of my risk, and then going forward your income will increase, something else will happen, your ability to maneuver will improve, some current liabilities. So it is, and this is, I've talked about life insurance cover, but I'm sure there are many other demands on your money, and you don't, you need to have a roadmap, and the first steps need to be taken. The procrastination is the danger, but you don't need to reach those goals and in 1 year, 2 years. There is enough time, and for most people, I luckily nothing will happen, and that is a good thing to in real life. So that is the second thing. And the third thing is, I think all of us are are so social, would want to meet people, do our own things, and we have been, like for example, I would like to play sports every weekend. Correct. Now there is no way that I can play a team sport or something for weekend, and I don't know when it will happen. And that was a big, how do I say, whatever you say and done, it's a big de-stressor when you do 1 2 hours of this work. It's totally different, physical, with different kind of guys, and that has gone away. Now you need to find something. So now I have taken up cycling. I think everybody else, I had not ridden a cycle since my college days. So that you need to find something which will take away boredom, and there is no easy answer. Some people may take to music, some people may take to reading or something, but keeping social distancing, because I think it's still, the disease has not gone away. Let us be very clear that government can't keep you locked down forever. I mean, that is correct, that the steps they are taking is right, that you need to open up. But I think the care that you need to take has not reduced any lesser than what you were to do in, let us say, April or May. At the same time, how do you keep yourself engaged, entertained, de-stress? I think everybody will have to find its own magic potion. I don't think we can completely do away with the earlier lifestyle that we had, but there is a challenge, and I mean, you have to somehow overcome it. I think that resolution will take us fast.
Right. Thank you, Abhijit, for those final words. I've really enjoyed and learned a lot from our discussion. For all the viewers, I hope you also learned a lot about life insurance and how to plan for it. Please follow and keep track of this LinkedIn page, as we'll bring you business leaders such as Abhijit, so you can learn from them via this session. Thank you so much and goodbye.
Thank you, Adil. Thanks a lot. Pleasure being here.